Welcome back to the Sparky Coach podcast. We've got our lounge room sessions rolling on, and we have a guest today in Angela Lee from Codification Accounting and Business Advisory. So, you do a bit of everything in the accounting space, which we're going to find out more about now. So, welcome along, Ange. Thanks for coming along.
Thank you. Thank you for having me.
That's all right. So, bit of a background, obviously, in the accounting game. Codification is your business. I know you're based out of Ballina now. Nice little spot. But obviously servicing people all over Australia with the way that technology helps us now. So, love to sort of find out a little bit about your history in the, I guess, accounting world as such that it is. So take me back. Let's transport ourselves back to a university time when a younger, not that much younger, slightly younger, Ange probably got into it. Also, what sort of how did you start in the accounting world?
Yeah, so I didn't go into it immediately after school. I was sort of didn't really know what to do with my life, to be honest. I'd tried a bit of real estate with sales and the property management side, and I always knew I had this fascination with numbers. And my mum and dad run a small business, so it
Mhm.
was always cool to watch mum go into the office and do all the bookkeeping and how to run it and everything like that. So I was pretty fascinated in business to begin with. And then so I did the whole, did the traveling around, went overseas, went to Central Australia and worked out there. And I was just kind of fumbling around, not knowing what to do. And then I met Brendan, my partner.
Mhm.
We came and settled in Ballina. And I'm just like, okay, well, I kind of really want to go to uni now. Done everything
No
and
pressure.
then yeah, yeah. So yeah, for my love of numbers, and it just kind of made sense that I would go into the accounting field because I was just so fascinated in business and how it all works um like, yeah, just how much everything costs and piecing it all together. And yeah, it just sort of grew from there and then started uni. I'm like, yep, this all makes sense to me. It's exactly where I need to be. So then
And
I,
did you enjoy it like once you sort of stepped into the, I guess, training side of it or study side of it is probably a better way to describe. Were you like, yeah, was it cooler or like more interesting than you thought to
oh
be?
yeah,
Yeah.
definitely. Yeah. It,
What? No, you go. Sorry.
it, the mundane compliance work, yeah, you just gotta do it. It's
Mhm.
something that's just always there. But once you start delving into someone's business and knowing, like, to me, reading a profit and loss and a balance sheet, it's a storytelling exercise for me. Like, it paints a picture of where they're up to, and I can immediately see if something's not quite right, being coded correctly or incorrectly. And yeah, so I can read a P&L like a story, and that's the thing that I love the most. You just you also learn so much about someone's life just by looking at their accounts. So
Yeah, spender or saver probably is
yeah, that's
what
right.
comes to
So
mind.
if you're wondering how much your accountant knows about you, yeah, it's quite a bit.
Quite like the habits, what you're doing on Friday, Saturday night on the corporate card as
Exactly.
well.
Yes. Yep. How far can you stretch these deductions?
Where can we go with that? So obviously this starts there with a bit of a intrigue, I guess, with obviously your parents' small business side of did that captivate you? Because I think there's sort of people that sit on both sides of the fence. I guess in my time of or, just getting to know people better, that there's some people who saw their parents in small businesses and it sort of was like, nah, I don't ever want to do what they do
Yeah,
because of
definitely.
maybe the hours they were putting in or the time it took away. And then alternatively, I think there's other people who uh, are inspired by it. They're like, hey, motivated by it all, and having a look at it of how they perform it. And I think where I sort of pick up there is that obviously with your mum doing the numbers part of the business, it was probably intriguing. I've got a bit of a sort of not a theory around it all, but I think there's sort of a couple of elements that turn people on or turn people off of the small business world if their parents were involved in it. And I think part of it comes down to there's the work side of things. So I think some people see their parents working really, really, really hard all the time, and they're like, nah, that they're inspired by that. But I think also too, there's the other side of it where people are inspired by the success that their parents had from successful small businesses. I also think it's almost intrinsically linked in the numbers side of it
Mm.
because I think if there was success, then generally that leads to obviously potential, wealth creation. They got to go on good holidays. Uh, yeah, they had a bit of like the nicer things in life potentially. Whereas I think sometimes if you're sort of grafting, and this is a bit of a blanket scenario if we're just looking at the numbers side of things, sometimes when the money's not there, then obviously they have to bust themselves to get to that. So as someone who had grew up with parents in small business, and then now you apply it a lot, does that sort of resonate with you? And do you sort of think back to that and how you can line up with how the numbers have such an effect
Yeah,
overall?
no, absolutely. They were in a business they had to bust their gut to build, and it never came easy.
Mm-hmm.
And dad was always working, never home, and so I did see them, really struggle the hard times, but then you also get to see the rewarding times as well. So yeah, it was more good times than bad times. So
Yeah.
I guess, and you're completely right. The experiences that your parents have running a small business absolutely can influence the outcome and what you feel about small business too. Um, yeah, so they worked really hard for everything that they have, and that's, yeah, really proud of them for what they've done and where they came. So yeah, no, it's really great. Um, yeah,
The numbers side of it is really, I think, interesting, and you've touched on it already with that you can almost tell someone's life as such, or like the way they're living their life around the numbers side of things. So, where did you sort of land when you got out of like once you became qualified and finished off your university qualification? Did you just bounce straight into, or did you have a particular industry that you were or sector you were interested in? Or were you like, I just got to try it all and see what happens, or did you sort of have a bit? Obviously, you're a little bit older,
mm,
sort of seen the world and traveled and done a few things, probably a little bit older and wiser. So you might have had a bit of an
wouldn't
idea.
say wiser.
Would say wiser. Okay,
Yeah.
sweet, no problem at all. Definitely, definitely was saying wiser. Did you have it? So did you land in a particular area, or know where you wanted to go, or again was it sort of like, I know I like this part of it, but what's next?
Yeah, the way I started out was just at it was a head office that controlled a lot of the regional schools. So that's where I started. It was very mundane, entering people's credit card expenses, not getting to see anything to do with the income or expenses put as a whole, and that just drove me crazy. Like, how does this one expense fit into the whole picture? And I could just, yeah, it didn't sit well that I only could see this really tiny part of what was happening. Um, and then I did, tax at uni, and that like really sparked my interest. I'm like, okay, I don't think I'm in the right place here. So then I searched for a job at an accounting firm. So I think I was at the head office school for probably 2 years,
Yeah.
and then yeah, went out into to find an accounting job, and that's, yeah, it definitely took the next level then, because it was like, yeah, this is exactly where I need to be. And working with small businesses and everything around that, it was just like, yeah, it just fits into place now. So I was at this small firm, so I was their first employee. They were from the Gold Coast and they just went out on their own. I was their first employee, and so grateful for everything, like everything that I know they taught me. So yeah, I'm so grateful that I was the first employee, because I had a lot of things chucked at me. Like, you just yeah, they were good at guiding and training, but as a small business, it's like you just have to adapt. And if you don't know how to do something, you just got to figure it out. Like it's just there's no manual or procedures or anything. You just gotta work it out. So I got, I guess my knowledge was escalated quite quickly by taking that position with them. And so it's a really, really fast-paced learning environment. And I guess similar is what's happening with me. The business just obviously we had such a tight-knit team and providing the services that everyone's after, it just grew really rapidly. And that was so exciting because you took on new clients that their other accountant, and I'm sure we'll get into this later, but their other accountant wasn't providing them any advice whatsoever. It was just, here's your tax return, and here's your BAS. It's kind of, there was such a gap missing.
Mhm.
And then to unlock that knowledge for them and give them like monthly reports or quarterly reports or whatever they needed, it was just like, it was obviously made a difference to my life, but then added so much more value to theirs. So,
Yes. So the I guess going from the school head office area or the regional office as such, where you're sort of only seeing a portion of expenses, so to speak, within a massive ecosystem that
mm,
it would be a part of, to then stepping into, hey, here's small business Y. You literally know everything, like where literally every cent goes, where the revenue is, where the expenses are, where the credit card was swiped incorrectly on a weekend away and things like that, which occur, sometimes, frequently. So I guess it was sort of what you were after. Would that be fair to say? Because you're like, oh, this is giving me the broader picture of it all in a
yeah, absolutely. Yeah. And like I say, like I could just read this story through seeing the whole picture. It's just like, oh, yeah, no, this all makes sense.
And then it's interesting you touched on that. Like, I guess there was an element of like sink or swim uh, element to just being a small business as such, and the requirement of like, hey, we can help you, we can guide you. And obviously, they gave you the support, but obviously, there was a want from your behalf because, hey, I want to do this, so I'm happy to learn and happy to get the exposure around it all. Did you feel like you just accelerated in your understanding and learning at a rapid pace just because of the need to jump right in and get fully around everything?
Yeah, no, absolutely. I consumed every textbook, every podcast, every little bit of information I could get my hands on to make me better at that position. And yeah, I loved it. And yeah, so grateful for them to give me the experience and to see the difference in the clients too. It's huge. But yeah, I mean, there was a moment where I'm like, oh, it's definitely a sink or swim moment. I doubted myself for a really long time, going, actually, can I do this? This is, people's livelihoods in your hands, sort of advising them. What if I advise them in the wrong areas? And yeah, so there was a lot of not so confidence moments. Um,
Yes.
but yeah, to date I haven't had any nasty phone calls. So
You had anything negative happen from? Is there
yeah,
is there
yeah,
is there takeaways or learnings that you took from that? I guess small practice, so to speak, is probably a way to describe it. That you still apply today, or I guess sort of took away that you're like, that is such a good idea or good way of doing it, or that's a great report, or how to approach and communicate with with your clients and things like that. Is there any like really key things that you sort of, I get, because we can broad brush the whole sector as a whole, and you can do that with any industry as such, but I think obviously there's a lot of people who are good, and then I reckon there's people who are sort of that exceptional level, and it's generally only a handful of things that they do differently, or do overall. Is there a few things? Because I would class you in that category personally, in the accounting world. Is there some things that you do now that you took away that you sort of, there's no textbook, there's no nothing at university at all. It was just sort of like, hey, these guys did that really well, and sort of if there were sort of what are they?
Yeah, just take out the jargon in the language when you're talking to clients. It's
Yeah.
like they don't need to know what legislation the number is, or they just need to know how it's going to affect them, what the long term, where they're standing long term and whatever. So a lot of accountants can get caught up in the language they use that doesn't obviously make sense to everyday people. And reports and whatever, yeah, you just have to make them as simple as possible. What's the key thing you need to know right here, right now? And don't get, yeah, so caught up in everything else happening in the background. It's just getting to the point, getting to the point that they, if they come out of the meeting going, I completely understood everything she just said, then that's a huge, huge thing for me.
Yeah,
So
no,
that,
I like that a lot. So communication of which I think you could almost blanket across life as a whole if you communicate really well, but communicate in a way that it's understanding, it has a massive difference. And I can relate to that because obviously different people from different sectors talk in their way, and it's an ability to humanize. It's not like probably too broad of a word to, and probably not quite applicable. It's more that like the layman's of it, like to bring it to an understanding of that person in that industry or that particular sector, and sort of almost like I need to talk their language. So like as in I need to talk my client's language as opposed to talking my language, and sort of. Would you agree with that? That's sort of what you've adopted in the sense
oh,
of
yeah. It can change from client to client
yeah.
too. The definitely the language that you use, and that's all about the relationship building you have with your clients. You get to know what's their threshold, what can they take on, how do they learn basically. Um, yeah, so absolutely you can have a meeting with someone where you do get into the weeds and talk about technical jargon, and then the next meeting you just got to, yeah, draw a diagram and lay it out in picture form, which is nothing wrong with that. It's just how we all take information in. You've just got to learn and adapt with the person you're talking to.
Now, I know one thing that you do really well within codification is I think you place a high importance on a monthly meeting as part of what you do with your clients. And I think broad brushedly across the sector, a lot of people are like, oh, hey, we get our BAS done, we get our tax done, and we have a tax meeting. And if you look at all that, a lot of it's rear view mirror style,
Yeah.
um, I guess, workings is the because you can only prepare a BAS after the quarter's been completed. Like you can't do it beforehand. Yeah, you can forecast and stuff like that, but you can only actually prepare it afterwards. So the rear view mirror, whereas I feel like you really take a front foot approach of particularly around the monthly meeting side of things. I'd just love to get your sort of take on it. And obviously you touched on it already with the reporting side of things that you took away from the business that you were working at for a period of time there. I just want to probably get your thoughts around just the importance of it, and I would say the huge importance of it all because a lot of the things that we go on about within Sparky Coach is like, well, how do you have a good year? Well, you have a good quarter. How do you have a good quarter? Well, you have a good 3 months. So then, how do you have a good 3 months? Well, it starts with having a good month, a good week, a good day. And I think with the reporting and the monthly meeting that you have, that enables that to occur because if I go back to, my time in business is a lot of the, and this is, it's not a knock on anyone. It's just, I think awareness is that a lot of the time you review everything annually and the, the horse is gone. Like it's bolted. Whereas, yeah, quarterly it is, you know, you can make some changes, but the cause and effect scenario that occurs. So if you try and do everything annually, the lead time for the change to actually be felt can be 1 to 2 years because you're still working off things that can take a year to change. Then again, with quarters, if you're working quarterly, it can take 6, 12, 18 months to feel that effect. Whereas if you're working monthly and weekly, because the weeks lead into the month, you can actually turn things around quite quickly, which we'll touch on a little bit further later on in the pod. But going back to that around the reporting and the meeting side of things, I just love to. Why do you place such a high importance of it on it, and really do push your clients around it?
Yeah, I think you hit the nail on the head. We don't really want to be looking at past data. We want to be seeing what's happening here and now. And I don't think the meetings are about, yeah, educating them to understand how their business is performing, educating them how to read the reports in the first place. Because I guess the monthly meetings are, yeah, we do this for a year or whatever, but the idea is that you take the tools to then go and do these sort of checks and balances by yourself. So it's not a huge ongoing cost. But I guess the addition to that is just having someone to be accountable to. It's like, this meeting's coming up. If we set tasks in our last meeting, you have to get those tasks done by the next meeting, because if you turn up, it's kind of a waste of everyone's time. And if things aren't getting checked off, we're never moving the needle forward. So yeah, the meetings could be like a temporary arrangement where you're just sort of trying to get yourself on track, and you just need that person to give you a bit of a push and someone to give you a hard deadline to say, yep, this is what needs to happen. But yeah, I guess accountability is the huge, and then the education side of it is huge. So, and yeah, you're right. We don't want to be looking at past data. I mean, past data is amazing to tell us what we shouldn't be doing, or if we are doing something well, let's not change it. But it's never gonna correct us really quickly. So the monthly thing, yeah, it's pretty quick turnaround. And it's also, closing off the month is really important too, because we need to have everything up to date. Because if you plan to buy an asset or, do something different with your business, we've got the numbers ready to go. So we have a really clear indication about, is this a good idea now? Should you wait? Should you? Yeah. So so many different positives can come out of those monthly meetings.
Yeah, sweet. And then I guess we'll dive into it a little bit more with some, some examples that we know of. But I probably want to touch on correcting the course, or, riding the ship, and those particular sort of, I guess, scenarios, or ways to look at the business. So like if a business isn't going to plan, or business isn't going as well as they would have hoped, I probably just want to hear from you that it actually doesn't take that long to correct your course as such. And I mean, you would see it more often than not, because a lot of people think, oh, it's going to take me ages to get back on track. But from your, experience, how quickly can you turn things around? By having, good months and good weeks and all that sort of, just sort of probably elaborate on that. How quickly can you start to turn things around?
Yeah, not long at all. No.
Hmm.
Even just making small tweaks, like getting rid of subscription you don't use, like all that really adds up. And yeah, the if you're not sitting where you need to be, maybe it's a problem with your pricing. The next day you change your pricing, and that's a pretty instant reaction that you can get. So yeah, 100%. It's I mean, don't get me wrong, in some instances, yes, it can be very lagging if you've quoted jobs that you kind of locked into. So there is that situation there. Um, but yeah, it doesn't take much. Few tweaks here and there. Like going through your expenses and cutting out anything that's not necessary. That's the easiest and fastest way right there. And then obviously assessing your charge out rates and everything, that gets a bit more detailed, but absolutely necessary.
Yeah.
And then from those sort of exercises, you spin off into a forecasting situation where you've got your ideal profit, you've got your expenses laid out. So then you kind of work backwards. You'd be like, okay, I know what my profit, I know what I'm happy to take home from this business. Like that would make me really happy. You know what your locked in expenses are, and then you just work backwards and be like, okay, how much revenue do I need to bring in to make this all achievable? And it's sort of then I guess yeah, you reverse engineer it from there, saying, okay, my product or my services is this times how many hours I've got available, is it achievable? Is it not? And yeah, just I guess that's more of a detailed, like a detailed pathway you can go, but in the meantime, you're still doing all these other tweaks that will move the needle. So yeah, don't think of it as such an overwhelming process because it's not. If the business isn't doing too well, it can quite easily get turned around.
Yeah. No, I think that's I think quite evident in some of the results that we've seen
Yeah,
lately as well.
absolutely. Yeah.
That it can be corrected really really quickly um, by just applying yourself, and I guess obviously identifying the data, which I do want to get onto in a second. But just like to hear you elaborate a little bit more. There is a niche space, obviously, that you operate in, which is the trade world, and in particular, a lot of Sparkies, a lot of people in the electro technology space, so like solar, electrical, aircon,
Yeah.
those sorts of areas. How did you get into the trade space, and is it your dream? Well, of course, we know it is your dream space, and you do worship the electrical
Oh,
gods daily.
absolutely. Yeah. Yeah.
But how did you get into the sort of that niche of the market?
Yeah, no, that's a good question. I guess it was a friend's connection that, yeah, clicked me and Sparky Coach together. So,
Yeah.
um, but I actually really like I have so much knowledge of electrical businesses now,
Yeah.
and I appreciate they're such admin heavy businesses and daunting as well because it's a very high risk in environment. Something could go wrong. So it's kind of really nice to have so much background on one industry because if you learn something for one person, then you can apply it to your whole client base.
Mhm.
And they obviously get the value of this. If just one person asks a question, then you'd be like, okay, I need to look into this. And then you'd be like, oh, this would be good for Jimmy and this would be good for Greg. And this, all these things just start unraveling. So it is pretty cool to have an accountant who is such an industry-based person because the even about knowing about government grants is such a win and what's available for your industry and all that. So um, yeah, I obviously have some challenges with I pretty much work for electricians in every state of Australia, and it's funny to see how different the states actually operate with regulations or fees and all, long service leave, workers' comp, all those fun things that come along with running the business. Um, but yeah, so it's so cool to have so much knowledge of one industry.
It's interesting too that I feel like anything, if there's an element of expertise in a certain area, like you've touched on there, you get exposed to a lot of different businesses which bring up the different challenges, but even state-based. And I probably want to touch on that there, that I know that basically like Ange has made up a spreadsheet section or part of the spreadsheet basically purely around um, workers' compensation insurance because there's different schemes across the country, and then the other one is the long service leave. So there's also different scenarios that apply to different states all around the country as well, which it I mean, from a layman's point of view, like it sort of blows your mind a little bit. You're like, we're in a country
Yeah,
of 24 million people. Why is it so complex?
I
But
know.
we're talking, we can talk just if we look in the long service leave space, is that, one state or a couple of states will purely it's just literally a portal that you send uh, documentation into to for like a proof of employment. That is it. There's no cost involved. There's nothing associated with it. It's covered in other ways through bill costs. All the way down to the other end where there's actually a percentage based on your. Is it based on the revenue or based on your wage, the payroll?
Wage costs.
Yeah,
Yeah.
wage costs. Yeah, so
Yeah.
based on a percentage of your wage costs then have to be physically transferred into a government entity bank account or yeah, the long service leave. So you can see the disparity there straight away. And I think this is where the expertise and knowledge comes into it from your point of view as an accountant to know that, hey, this particular state, just log into this portal and send it through. Whereas this other particular state, it's at 2% of your wage bill. So that's actually, let's just say it's $100,000 wage bill for the year. That 2%, you have to find that money. Like that's 2K that just comes off the bottom line straight
Yeah.
away. So if you haven't factored that in to your cost of operations, if we're looking at a wage bill of, you know, $1 million, for example, that is a significant sum of money. And I think in your time and your experiences as well, like you would have seen where people just were unaware of this.
Oh, yeah, no, absolutely. People who should have been putting claims in, maybe they're like 9 years into the industry or something like that. So they're due for long service leave in a year. They got to go backtrack and lodge all these, hours in and whatever. So yeah, as we go through in the Sparky Coach program with the cost of ops side of it, it's obviously a category in there, and then it's always having that conversation with, you've got your portal set up, you've all lodged up to date and everything like that. Because like it's a pretty awesome program that, you know, having, if you move from one employee to another, you still get your long service leave. So, I mean, that is an awesome incentive in itself. But yes, I do find it a bit fair that I think Queensland is the cheapest state to run a business. Just FYI, everybody, don't all flock to Queensland. But yeah, it's amazing to see that some states will carry that levy just based on the building levies that get paid. And then other states, yeah, it's the burden is on the employer. So yeah, it can be a bit of a shock when you actually realize if you're in a state that you do have to pay for it, and you're 2 years into the business and you have to turn around and fork out all this money you didn't even know that you had to. So yeah, hopefully if you've got an accountant on board there talking you through that whole process. But yeah, just be aware it is completely different from state to state. It can catch you out.
Yeah, have a massive can have a massive impact because, like I said, that $2,000, for example, of just 100,000 payroll or wage bill, sorry. Uh, and I think the thing to understand and also identify is that $100,000 nowadays is essentially just a tradesman. Yeah,
Yeah.
give or take a little bit if we're just averaging it out as
Yeah.
a whole, or just above it. So, you know, it's not hard for that $2,000, for example, or $1,500 to accumulate even just in a year. And then if you have to then retrospectively go backwards, it can be quite financially crippling
Yeah.
for a lot of businesses. But also to even just finding that amount of money each year
Mhm.
as well, not being aware of it and not building in or factoring into your cost of operations is huge. So I think obviously with you, Ange, being niche down in this particular electro technology space and trade space is probably an overarching sort of broad brush approach, but particularly in the electrical world, um, is really valuable to get done because there's little nuances, like you said, you probably know more about electrical than you ever dreamed of knowing about.
I do. I do. Yeah.
uh, and there's obviously very similar traits, and I think like you touched on there, you were probably a little bit shocked by the admin heaviness or
Oh
the
yeah.
requirements
Yeah.
in running an electrical business because yeah, parked aside, there are you have other clients also in other industries, but obviously our key focus is around the electro technology space is that it some sectors very minimal. You know, apart from wages, their actual overheads, it's very, very clear. It's like some subscriptions and maybe a lease, and that's
Yeah.
it, sort of thing,
Yep.
and maybe some licensing fees or something like that. But other than that, it's like literally that's it. Whereas obviously in our space, you can go like I think our cost of operation spreadsheet's about 100 lines long with
Yeah. Yeah, it is pretty full on. I can't wait for this national license to get off the ground as well, because far out finding, states and oh no, this one's on a 3-year turnaround, this one's on a 5-year turnaround. Oh no, this was the cost when you renewed it and now it's gone up. It's like, yeah, it's all over the shop. So, um, hopefully they get onto that pretty quickly. That it was announced at the budget March this year.
Mm.
So the licensing will be national wide. So bring that on, please.
Yeah, fingers crossed as well to see where it lands. It'll be interesting to see what happens and how they go into it, because then obviously there's the individual licensing associated with it, then the contracting licensing with it. I personally can't see them abolishing the contracting fees per state, because that's a cash grab for the
Oh,
governments themselves.
yeah. Yep.
But yeah, hopefully it does go across in that space. One thing I want to move on to around is what's a good bookkeeper? Uh, because obviously, and I think I'd like to dive into this a little bit because overarching, everyone sees an accountant uh, services as such, but there's so many different sectors within the accounting side of it. There's accounting, there's business advisory, then there's bookkeeping, and all those sorts of things. Do you want to just sort of touch on, I guess, what a good bookkeeper does, and then we'll have a look at a bit more down the accounting side of it, and then the business advisory side of it all. Yeah, and there are more areas of the accounting world, but they're sort of probably the three main channels that would apply to most Sparky businesses as such. What's a good bookkeeper do you feel, and what should they be doing?
Great question. Where I've seen some doozy situations lately. So first, I think with the way that we are with technology at the moment, the first and foremost is they're trying to implement some sort of automation system in your bookkeeping process, because we're going into a world where there's data scraping and there's automation happening. So they essentially need to start making themselves redundant in a sense. So if they can take out some of the manual processing and utilize the technology, that's definitely where it needs to be heading. Number two is just get everything done in a timely manner. Don't let things linger, because we all forget things. Things get lost. If just stay on top of it, whether that's a weekly, fortnightly, or monthly service. I don't think anything should go more than a month without it getting either asked a question about, do you remember what this is? Can you send the receipt in for this? And just make sure everything's closed off within that month. Just reviewing the work that goes in too. So you can feel like you're being confident with coding everything, but then if you step back and review the reports, you can pick up on things that aren't quite right and then change the course of it. So yeah, I guess it's just about future-proofing the business so the cost isn't, forever there. Being accurate with the data and then doing it in a timely manner. And I guess with an exceptional bookkeeper, they're also got your back if they come across something that's not quite right. They'll be like, hey, have you thought about this? Or, I'm concerned about this. So they just take it to the next level and tell you stuff that you didn't even think you needed or wanted, or information that you should know that you don't know. So
Yeah, so within the bookkeeping, I guess I'm going to probably try and dumb it down here a little bit for everyone who's listening. So obviously you've got an accounting software. So that would be like a Xero, a MyOb, um, what else is out there actually? Like apart, I feel like
QuickBooks.
Zero's the QuickBooks, yeah,
Reckon
reckon.
there's actually a new one coming. It's called Easy Business.
Okay,
Easy Business app, I think is the full name.
okay,
Think they're trying to take some of the zero market share.
okay.
Had a
Yep,
bit of a play around with it. It's all right. It's all right.
seems right. Cool.
Yeah.
So obviously, you have your accounting software as a business owner. So the main, I guess, bookkeeping tasks that would be done on a weekly, and I mean, I don't think you really want it to be pushed more than a month in the so more than a week in the reconciling sort of thing. So
No.
you've got your reconciling. So what that means is essentially you've got your money coming in and money going out, basically. So you've got credits and debits. I think is that the technical
Yep,
term
you got it. Yep,
within
nailed
Zero is
it.
how they've gone on with it. So that needs to be basically lined up. So if you've got a invoice that you've sent out to your client, that client will then pay the money into your bank account. It'll have an invoice number in Zero, and well, actually, correct me if I'm wrong, but I think all of them now are smart enough. It identifies the some key wording, basically either invoice numbers or the dollar amounts, and they make some assumptions,
Yeah, correct.
and and
Yep.
they're all linked to your actual bank accounts or credit cards or whatever you have as well. So the bookkeeping side of things, reconciling, really, really important. So your credits and debits every single week are off the table to be like, yes, this is what we had money coming in, and this is the money going out. So that's probably a really important step one, which is fair enough. Then obviously the coding side of things. Can you dive into that a little bit for me around what we mean by coding within accounting software program?
Yeah, yeah. So you can obviously with the reconciling, you have to categorize them somewhere. So it's either got to go on the profit and loss or the balance sheet. If you get the categories right when you do the reconciling, the reports make a lot of sense. So I guess the coding and setting up the chart of accounts it can be as detailed or as basic as you need it to be. But if you've got the opportunity to go detail, then you should take that because it's obviously going to give you a lot more data in the long run. Without going, too over the top, though, you don't need a account for every single subscription you got. You can just have one subscription code. But you don't want to be lumping your motor vehicle expenses just into the one category because it's really hard to have that overview about, what's fuel, what's rego, what's insurance, what's repairs and maintenance. So you should at minimum have, 4 codes for your, or 3, I should say, minimum 3 codes just for your motor vehicle expenses. And then that way you can have a really quick look at your transactions and you can immediately see if something's not quite coded right. So yeah, you have to sort of be deep. If you have to think more than 20 seconds about where this one transaction should go, then it probably means you've got way too many codes on your plate.
Okay.
But if it's a natural thing saying you know exactly where that should go, then you probably set yourself up quite good with your chart of accounts.
Cool. So we've got reconciling. We've got the coding side of things with the bookkeeping. What else would a bookkeeper be doing within the monthly, I guess, side of just keeping your accounting software up to date?
Yeah, I guess it depends on their skill level, whether they also progress into doing the monthly reports for you to give you, insight into how your business is going. Um, but I guess they have to have your back in some sense that whatever's sitting on your accounts receivable page is actually what's genuinely owing to you from the customers. Because if that's not quite right and you're looking at your dashboard and you'd be like, okay, there's this dollar amount that I'm expected to come in from a customer and it's not accurate, you could be getting a little bit too excited. This money is coming to you, but it's not accurate. So, it could have been a double up or it could have been, actually they have paid, it's just being reconciled incorrectly. So I guess it's about they need to check their own work in a sense. So
Yeah.
they need to just double check themselves and ask you questions like it's their job to do as much as they can without annoying you or asking you questions, but they can't just, willy-nilly go and do something behind your back, just assuming, I guess, making assumptions. But yeah, in terms of services, well, I guess payroll is if
Yeah.
bookkeepers can take on payroll and they can do BASs and they can do super, get your super in order. But yeah, I guess it just depends on the skill level they have and what you actually need from them, I
Yeah.
guess. So yeah, the services fit with what you need.
Yes, it's quite a broad spectrum, I guess, there that can be done every week, every month, every quarter
Yeah.
to ensure that you well, A, there's a compliance side of it to tick the boxes in a sense of ensuring your tax obligations essentially with the taxation side of things, but then also too just ticking the boxes of just having a business that is operationally, financially sound. So, and I think it's really important you touch on there with the, hey, what money am I owed versus what money do we owe
Yeah.
as such? Because I think it's really important because what we mean by this, and we've probably got a couple of examples that we could dive into a little bit, is that you may have money owed to you, say an outstanding invoice, for example, from a client that may never be getting paid, right? Because it's a bad debt as such, but it's still sitting on the receivable balance basically. So it's like, oh, hey, let's just call it 10 grand because 10 grand's a round number. And you're getting excited about 10 grand because you know I've got a tax bill that's due, it's $5,000, whatever it is, scenario. But that 10 grand actually doesn't exist anymore. It actually has to be put into bad debt, written off as such. Or it could be that, hey, some reconciliation has gone awry at some stage and it's actually showing some incorrect amount. So I'd love to hear a couple of like real world scenarios that you've come across. And we've actually talked about one recently, which is, I guess, from your point of view, quite frustrating. But yeah, I'll just share a little bit more around that sort of experience and sort of where it sort of went awry, I guess.
Yeah. Yeah. I think my mouth was open for about 5 minutes before I comprehended why, yeah, no, this poor guy had had a bookkeeper and an accountant on board. So two separate people doing services for him and looked at the accounts receivable and there was stuff there from 2 years ago, just sitting there, just lingering in the background, cluttering up the list. And yeah, we just delve into it and it's just things had been paid that were closed off. So essentially, it ended up being that the income was doubled in, well, not, sorry, I shouldn't say doubled. There was 14,000 worth of income that went into one financial year. The tax was paid on that. And it wasn't actually technically income because it was that the invoices had been doubled up and just not closed off as being paid rather than just put in as a spend money. So yeah, obviously paying more tax on that than you need to. And so that's one side of the equation. But then I guess the pressing side is you don't have a clear vision about what money you are supposed to be chasing or how much you're going to get in, 2 weeks' time or, when they're falling due. It was just, yeah, fumbling around. So, yeah, who's to say that he hasn't missed chasing someone for payment because it was just in this huge long list of invoices that went back 2 years ago. So if you can't rely on your accounts receivable, then there's something, yeah, really, really wrong in your zero file that you need to get sorted out. So yeah, I was really disappointed in the services that he was getting because, yeah, unfortunately, two professional people had failed him and he didn't know what questions to ask either. So yeah, it's a little disappointing. Um, but I think we're getting him on track now.
Yeah.
So getting it cleaned up.
I think the thing that's really frustrating there is that the time that's lapsed as well. So
Yeah,
the
yeah,
actual
absolutely.
time between, and there's actually been it's two financial years as such that have lapsed
Yeah,
between it all.
yeah,
So and then obviously because let's just use a scenario here. So for $14,000 in revenue, which has been allocated to financial year one, and then so that goes through and you pay tax on that because it's been as income. Let's say it was never paid, for example. So let's just use scenario one of like it was a bad debt, and correct me if I'm wrong here at any stage. It would have given us the opportunity the next year to write that down on the business. So then essentially it's not there's no tax credit or anything as such in that, but what it does is it will help you with your overall revenue potentially, like where the revenue
yeah,
sits overall as a whole. The other thing that, and this is what actually occurred, is that it was just paid twice. So basically, it was shown as revenue in financial year one, and then revenue as financial year two. So it's almost like a phantom
yeah,
amount of money
yeah.
that never existed. So, $14,000, you do the sum on it. Basically you're paying a couple of few $100 in tax on it. What's that? 25%, I think it's at now. Is that right?
Yeah.
So, yeah, a few $100, but it's not really the point. And I think if we go back to have a quick look at it all, is why we're pedantic here at Sparky Coach around closing the closing the week and closing the month, because all these things come up. So if you stay on top of all the, let's call them mundane items, which they are. Let's we stay on top of all the mundane, repetitive tasks. They don't blow out to become big tasks or big issues. So let's just say we look at the week and we're like, oh, hey, we've got two overdue invoices. Sweet, too easy. Let's chase them up. If we've got two in that week and it's per week, then at the end of the month we've now got eight. If we didn't do it per week, if we don't do it per month and we do it per quarter, we've now got 24. And so
Mm.
that just it's the compounding effect of I guess there's an element of ignoring it, and then the same to the compounding effect of if we look into your account side of things, that if it's ignored or mishandled as such, the compounding effect takes so much longer to then rectify and unravel. So on that too, then, so we've had a look at where the bookkeeper sits into it. So where's an accountant sit into it then? So what's a good accountant going to be doing for you?
Yeah, good question. And I think there's, yeah, like you said before, there's such a broad range of services an accountant can provide to you. And I guess it's up to them to present, these are all the services that we provide. We think that you need this, this, and this. And then if for you to understand what this, and this is, they generally send you a proposal. So you get your head around that. But it's all, yeah. So a good accountant, they have to know what your business is, what you're about, what your goals are, like what you're actually trying to work towards, because they have to then, accommodate that to help you through the tax world. If you're going for finance on your home, you obviously need that year to look quite well, whether that's through wages or the business or however it's structured. So they need to know that knowledge so then they can work with you to help you achieve those goals. So it's like it's not just someone who sits in the background and does your compliance work, does, punches out your tax return, does your BASs, whatever, other lodgements need to happen. They have to be a little bit more involved in the business and involved in you as a person to really help you through that. And they're also there to answer any of your questions as well. So you got to have open communication with them. Don't be afraid to ask the silly questions. And yeah, sort of there's your partner in business. and they're your
Mhm.
accountability person as well. It's such a broad area.
It's almost like there's I mean, you could look at it as like an extension of your business or a another employee of your
Mm,
business as such, but they're in a special field of the business. And so I think this is where it's important that language that's used by your accountant is something you're comfortable with or can understand. And I know we touched on it at the very beginning around using, you know, I guess, language that your clients feel comfortable with to try and it's not that you're dumbing it down. I think that's too harsh a word. It's removing jargon, like you said, that's irrelevant to the conversation and putting it in a way that's like digestible.
yeah,
And the understanding that these people, the relationship is, I think, key to it all. So, like, it's as much about the skill set as it is the relationship because I think when you find someone who's really good, you can lean on them and actually, and this is a business owner point of view, you can lean on and actually have some conversations around, things might not be going as good as you anticipated, but you might be able to be like, oh, hey, this because of A, B, C, D. And it's like, oh, cool, adds context to it. It
mm,
makes sense. You're
yeah,
aware of it. So it can put them at ease. Um, because I would say genuinely, if your accountant doesn't is almost not like your biggest cheerleader as a such in hey, let's just say your goal is as what we set here at Sparky Coach is market wage and 20% net. If they're not cheering you to get there, it's sort of I would be like, oh,
yeah,
am I really? Do I really want to be in business with this? If it's just like tick boxes, move on to the next one. It's like no, they should be cheering you on and understanding because if it's not going well, they want to have if you can provide the context, they're like, oh, makes perfect sense. That job that you quoted 18 months ago is not going great. Okay, how can you limit? And they're not here to be like, oh, hey, this is what you need to do. But it's like, can you limit the damage? What are we sort of looking at as a whole? And you're like, okay, I think we're going to sit here. You're like, cool, no worries. Well, that can help with their forecasting, right?
mm, yeah,
Get a bit of an idea because there may be things that we need to get an overdraft in place, or hey, we need to get a business. Like, hey, is there any cash that you can inject into the business? Things like that. On,
yeah,
on the other side, if things are going well, it's like okay, adding context to it, they can start asking the questions, and you can provide the context to be like, oh well, this, and this. Like, okay, cool, sweet, awesome. Let's keep doing that, or can we work on this? Or hey, look, we're going quite well here. This is where we're projected to be sitting. Have you ever thought about what you're going to be doing with the profit at the end of the year?
yeah,
And it's like,
yeah.
no, I've never thought about that in my life because I've never had profit before, so to speak, or a profit of that sum. So then I think that's where it can naturally move on to. I think I really want to emphasize that is that they're an extension of your business, a partner in your business. And I think if they're not, as I said, like almost like one of your loudest cheerleaders, I think that needs to be
Yeah,
questioned, like the relationship. And I guess
absolutely.
that
Have to
then
be.
moves on to where does business advisory sit into the scheme of I guess your accountant side of things. They're probably the three main pillars that most people would land on. What's business advisory?
It's well,
Yeah,
it's yeah. How long's a piece of string?
yeah.
It's uh
I guess probably let's look at some common things that like we're Sparkies. What are some things that we would be looking to do with our profit? So I think it goes with like structures, SMSFs, things like that you'd be looking
yeah,
at. And I
yeah,
guess that's
no,
where the
absolutely.
advisory comes into it.
Yeah, it's it can be advisory can be looking at getting really into the nitty-gritty side of it and it looking at your charge out rate. Is it right? Is it doing the reports to then spit out the performance and advising you this is why it sits where it sits, but if you do this, then you can, get a better result. So I guess that's one area of advisory. It's more centered around the business performance.
Yeah, so
So,
giving
yeah,
the advice based on just numbers in the sense of like, hey, some of them are probably hard conversations in the sense of, hey, like you've been on a treadmill for a couple of months. Have you thought of just
Yep.
doing these certain things here? And
Yep.
it's like, because if you did this, that's an extra X amount of dollars. If you did this, on average, that's an X. So two
Yeah.
things I look at is charge out rate and then margin on material.
Mm.
So
And then
they're the two things.
yeah, as a business owner, it's completely up to you if you wanted to take that on board and then start implementing it. But I guess that the advisory is just to flesh out the ideas and give you a direction, and then you take that and you run with it. So that's one aspect of the advisory. But then the other side is like you were talking about, whether it's, so as accountants with self-managed super funds, we can't tell you, yeah, go set up one, because we're not licensed to do that. You need a financial planner. But we can talk to you about the tax side of it and what that means, and how that's going to grow your wealth via the tax vehicle side of it. So yeah, like advice on structure. Are you in the right structure? Advice on your personal stuff. Should you go out and buy an investment property? How's that going to look? Is it's negatively geared? It's going to help you, reduce taxable income, etc., etc. So I think if you had a question, a burning question, and you asked your accountant, they would definitely be able to provide that service, whether it's under the compliance banner or the advisory banner. It's just, yeah. I mean, they have to be invested in your business, and like chances are if they don't possess the skill set that you need, they'll know another accountant or a group of accountants that they can, click you into place with. So yeah, it's just about asking the question and finding out what you actually need, and then getting a plan in place as to, can this service be connected? Can it, yeah. So very, very broad. But yeah, advisory can be very broad.
Yeah. I think equally as important, um, when your accountant is aware of where your business position sits, and so when you do come to a question, you come armed with the question that there is a knowledge space that either you can be passed on to, or hey, you need to speak to this person about that sort of financial advice as such, but then also too it can be like, well, hey, this is where profits are sitting at, so to speak. And I think probably it definitely more so comes into it when there is some profits there, because it looks at the structure side of things and the way you set up. But equally too, at any stage, because whatever you're earning has a direct impact on the decisions that you can make, and that's where the decisions can help to bounce off someone else. And again, I think that's why it needs to go back. It's a relationship or extension of your business that it really sits in there, and they
Yeah.
do need to have a direct sort of investment as such within the business as a
If
whole. Because if you look
Yeah.
at any massive organization or anything like that, they literally have teams of full-time people in the finance department who are doing this. It's just that on a smaller scale, less time is required, but it's equally as important. I would say almost more important, because generally in a larger organization, there is I guess a management team who would have a pretty good idea about finances as a whole, because that's what they're in those positions for ultimately. Whether you are the CEO or ops or whatever it is, essentially their main goal is to ensure the business makes as much money as possible.
Yeah, absolutely.
That's what their role is, and whether that is by increasing the range of products that they sell, so they've got more revenue streams, whether it's by increasing the cost of purchasing, so the RRP, whether it's by reducing manufacturing costs. And there's multiple ways to do that. Like there's the slash and burn approach, there's offshoring, there's different manufacturers. There's all that's literally where their job sits as
Yeah.
a whole. So they're fully aware of it. So I would say it's more important almost in small business than any other. If you're comparing yourselves to the sort of larger scale businesses in the world, it's I would say it's more important, because you generally probably don't have as much idea and or have the time to focus on one area, whereas they generally have teams of people, and people are really good at one or two things, and that's about it. So that's really, I guess the three sort of key areas that I think are super important to consider around the bookkeeping, accounting, and then obviously there's the business advisory side of things. Is there anything else that you think's really important considerations to take into account as a business, like electrical business owner as such, that you should be looking at on your financial side of things that we haven't already touched on?
I guess the if you're operating as a company, just to understand about your Div 7A loan.
Mhm.
That's sort of an area that I've noticed is maybe lacking in a little bit of education.
Cool. So let's
So,
dive into that a little bit more. So, like, if you can just explain what a Div 7A loan is more.
yep, in a nutshell, it's
Mhm.
profits you've taken out of the company above a wage you've potentially taken, above income that you've declared to yourself from
Mhm.
the company. So, yeah, company profits then move across into you or a trust or whoever the shareholder is of that company. So it sits there as a loan, and it needs to be dealt with at some point because it's money that you've taken out before tax, basically. So it's I mean, the company pays tax on the profits and that money's gone. So you have to then massage this Div 7A loan to get it across to that shareholder at some point. So you can take the approach of doing the minimum repayments over 7 years and doing it as a dividend, assuming there's franking credits there. Won't get too
Yeah.
far into the complication side of it. But I guess the point that I'm trying to make is there is consequences of just taking money out of a company. There's consequences later on, just taking it out without doing a wage or considering what dividend or franking credits there are. So, um, and I appreciate that in some point of your business, if you do have spare cash sitting in the business account, you're going to want to take that out and use them for other investments or personal purchases. So, because at some point the cash isn't helping the business, it's not helping you personally. So, you've got to get it out. Just make sure you understand timing, the amounts that you're taking out, and how that is going to flow on effect to your later income tax years. So, yeah, I guess that's one area that I haven't seen has had a lot of education around it. Because like you were saying before, it can be just quite easy to tap that card on the weekends and put it through. And if it's not technically a business expense, it gets flicked over to the loan account, and that's how this whole Div 7A loan can
Yeah.
start. And
Yeah.
it can rack up if it's just little purchases here and there.
Yeah.
It can start to get a bit out of control.
Yeah, nice. I think it's really important to be aware of it as a whole, and obviously there's structure issues which you would need to talk to your accountant actually about. But it's just another way of drawing, obviously, the money out, but also too in a different way, rather than just being like, I'm just going to pay myself another 100 grand, another 100 grand, another 100 grand, another 100 grand, because obviously that does have implications. Firstly, the one you think around straight away is just personal income tax.
Mm.
You're basically pulling out money and paying it. More than likely not. You're probably paying the highest tax bracket,
Yeah.
which is economically not the smartest way to go about it.
Yeah, that's right. And it also can compound if you're doing the high amounts every year, then you end up having three loans on 1 year that you got to deal with minimum repayments for all of them. So it can get quickly out of control and accumulate over the years as well.
Yeah, nice. I like that. I like that. I think it's a consideration to take in account for your business, particularly once it gets up and humming,
Mm.
which
Yeah,
is
and that's
obviously
what
our aim.
we're all aiming for, hey, is just to have that spare cash that is available to pull out when you need it.
And be able to use it in a way that benefits yourself and your family in the long term
Yeah.
overall, which is why why I would say most people get into everyone gets into business for it. And I don't think there's any shame in saying that either too. And so
Mm.
like we're in business to make money. So that's the reality of it all. If we wanted to be a charity, there's plenty of charity organisations out there that we could have gone to, and got a job out of, or, volunteered our time to, which is essentially need to look at it. I think you need to look at those in a tough way, or in a tough decision. If things aren't going amazing, I think you do need to have the tough conversations with your accountant, more than likely, first and foremost. And then, if you don't know, reach out to us here at Sparky Coach, and we're happy to help out, because it's not it's meant to be an enjoyable time of your life as well, because most people in business are going to sort of probably be aged between their early to mid 20s, and probably sort of around that 50 sort of range, or early to mid 40s to the 50 side of things as well. It's a good time of your life, so you may as
Yeah.
well be enjoying it, and not be stressed to the hilt. So
And
definitely encourage.
we're just touching on that with the Sparky Coach. We do, the close the months thing, and we're definitely seeing the people who are going through the program, doing everything that's prescribed and fixing issues and whatever. You can see we've got this spreadsheet that has, it's color coded like a traffic light system. And it's very obvious when it goes from red to orange to green, and you can see everyone's mood change and they're a little bit more positive about well, I shouldn't say little, they're a lot more positive about the business, because they're not working for a charity because some businesses can be run as a charity, and they maybe do it because they love it, or they don't know how to fix it or whatever. But here in the Sparky Coach program, it's so cool to see that tracking the numbers and, things that you're doing changing over time. So it's actually really rewarding. And then I guess that's where the whole surplus cash comes into it, because they're hitting that 20% that they need to. And then they're not used to the cash being there because it hasn't quite been as profitable in the past. So then that whole conversation needs to start then. Okay, you're actually doing quite well in the business now. What's your next step? Like, what do you need to then focus on from there? So, yeah.
Two quick things I do want to circle back onto, which I do. I guess you would have more discussions than me, but I have had discussions around it previously. With members and just general people. I just probably want to dive in, like an explanation a little bit, or explain to everyone around. So there's your P&L sheet, so there's your profit and loss, and then there's your balance sheet. Now they're obviously, they have linkage as such, but they're also two separate. So in its simplest way, can you explain to me what the P&L is first, and then we'll move on to what the balance sheet is? Because generally speaking, these would be provided to you. Well, I would say they should be provided to you on a monthly basis, as such. Worst case, you could look at it quarterly, but if you're looking at a monthly basis, what's the P&L telling us? What's its purpose, and what is it? What does it do?
Yeah, good question. There's some misconception around the profit and loss, because a lot of people think it's what money's hit the bank account or what money's left the bank account. But it's not the case. So you've obviously got sales right up the top. You've got cost of goods sold, which is everything that goes into a job that you're then able to on charge back into the sales.
So your materials, labor, things like that is
Subcontractors, yep,
subbies. Yeah,
wages,
they're
super,
super.
field
They're pretty
staff
much,
wages,
yeah,
yeah,
field staff. Yeah, they're
field
the
staff
common.
only.
Yeah. So really simply put, that cost of goods sold is what goes in to the actual execution of the job. So
Yeah.
we make that really clear. So your materials, your wages for your field staff, superannuation for your field staff, subcontractors. Is there anything else that would really come up?
Hire plant of equipment
Yep.
if you need to hire something for a job that
Yep.
goes in there. So yeah, yeah, in a nutshell, anything that you are able to then on charge back to your customer.
Nice.
Yeah. So you've got to, if there's an invoice that's been raised within that month, it's going to fall in the profit and loss, regardless of if the customer's paid or not. So that's really, really need to understand that. Invoices raised go in there. Same with the material side of things. So we're trying to train everyone to get their bills in on the month that they're raised. So whether that's individual bills or statements. So you're lining up your sales with your materials. And then after those two categories, you're left with a gross profit. So the gross profit is telling you how efficiently you're doing these jobs and the margins that you have left after you've paid the direct costs to do with those jobs. So really important to get the sales materials lined up in the same month, because then that's gross profit's going to give you such a good reading on how you went for the month. And then not to dive too much into the percentages or whatever, but we're all aiming for 35 and 45% in that gross profit area.
Yep.
Yeah. So then moving down to the P&L, we've got an other income category. So where that's interest income, apprenticeship incentives, maybe you had some insurance payouts, anything that doesn't require you to then invoice the customer or labor gone into it, or, so just things that aren't service or material based, I guess, they sit under the other income.
Yes.
Then all your operating expenses come in after that. So again, same thing. It's not necessarily when you pay these operating expenses. It's when the bill is raised there. So yeah, the operating expenses are things like your accounting fees, your subscriptions, your motor vehicle expenses, your licensing, training, staff amenities, your admin. If you've got an admin, they all sit in the operating. Their wages or subcontracting sits in the operating side of it. So then obviously that all comes down to give you a net profit. And that's the 20% we keep harping on about. So that's where that should land. It's not so not to jump too ahead with your balance sheet question, but you've got to remember that some things don't go through the P&L that you do have to fork out money for each month or quarterly or whatever you got to do. So you got to know that the net profit that you're looking at on the profit and loss, it's not going to represent what cash should be in the bank. It's a business performance metric that what sales have gone in, what expenses have gone out. Deductibility expenses, I guess, in a sense. So never try and correlate your net profits back to what you should have in the bank, because it doesn't really work that way. So that's the profit and loss.
Nice. I like it.
The balance sheet.
Yes.
So this is obviously a lot more complicated area. With the profit and loss, we look at it from one date to another. So there's always a range in there that we're looking at. The balance sheet is always looked at a standalone date, and it's always at a point in time. So it's always what happened on that day and where are the balances. So your balance sheet is going to have, most of the time, it's going to have your bank accounts up the top. So what cash are you holding? Then it's going to have what assets are you holding. So that can be your cars, any specialized equipment, your office equipment, all that stuff. And that gets depreciated over time. So it's probably not going to sit at what it's worth here and now, but it's going to sit at a value that you bought it for less the depreciation. With the liability, like the liabilities is a really valuable thing on the balance sheet for you to know. So you have current liabilities and non-current. So with the current, it's always what you're expecting to pay out within a month or 3 months. So that's generally under 12 months is the rule there. But to be honest, the majority of what sits in the current assets is your GST, your super, your PYG, your accounts payable, and all those are pretty dealt with within 3 months. So to have that current liability pretty accurate is also going to help you understand what has to leave the bank account in the near future.
Yeah.
So essentially, you've got what cash you've got available, what assets you hold, what you're expecting to pay out of the bank account. So then it gives you, what assets or what net value is the business holding. And then you've got, your loan accounts to yourself if you have them, and then the equity sits there. So yeah, just remember always a snapshot in time to tell you what assets you've got, what liabilities you've got going out, and then the net value of the business can't obviously always be relied upon because you've got assets in there that aren't going to represent the true value of what they're being held at because they're depreciated and whatever, but it should give you, a relatively good idea.
And then obviously there's the considerations that take into account with the assets is if there's anything actually owed on them as well, because
Oh
obviously
yes, of course. Yep.
has an impact on it as well.
Yeah, good point. It's
Which
everybody sort of goes out and buys the cars on finance these days. It's very hard to get that cash up front just to go out and buy a car. So yeah, the loan of the car goes on the balance sheet. And then if it's set up right, you should automatically be able to look at that and go, I've got this much left on this car and this much left on that car. So it gives you a sense of how far you're in with that purchase. And
yeah, which is really, really good to know because this is the sort of information that you want to know when you come to end of financial years in particular, to have an idea of, hey, we're going to get into some tax planning side of things. If we've got some surplus profits that are sitting there, a way that obviously you can look at it is like, hey, is there any debts that we can actually pay down?
yeah,
Yeah,
absolutely.
everything's a case by case scenario, but what it will do is actually reduce your taxable income because you've paid off those particular assets, and then now they actually become assets for the business because you actually own it outright. So it's actually I look at it, me personally, I don't know how you look at it, Ange, but in my sense, once you own it, to me, it is actually a true asset. When
Yes.
you still have it as a loan, it's not
Yeah.
really your asset. You just use it, and the loan company is essentially that asset is secured against the loan as such. So really, it's never yours. It's because if something went pear shaped, they just be like, "Thanks very much, see you later," sort
Yeah.
of thing,
Yeah.
and get it sorted. So I think that's important to understand when you're having a look at the balance. Like you've got an idea because you might be like, "Oh, that one's only $10,000. Let's just pay that off this year because the 10 grand isn't going to have a massive financial effect on us." Whereas 10 grand may have a massive effect on you in other instances. So, um, thanks for explaining the P&L and the balance sheet types of things because I do think I do get it a lot as well as that, like, people are like, oh, how's your month going? And it's like, oh, it's going really, really good. We should get some payments in soon. It's like, well, no, we're not actually interested in the payments because they're
Yeah.
historical. So those payments that are coming in could be from a month ago or 2 months ago. We want to look in the now of like, hey, what's your revenue for the month and what have you actually invoiced out? Not
Yes.
what's coming into the bank account, what's actually been invoiced out. And I think again, at Sparky Coach here, we really emphasize the closing out every week and closing out the month because it is some of the results we've seen lately are purely based on the consistency.
Yeah.
So
Yep.
instead of the yo-yo effect, which is, and I know you touched on it before, materials that are purchased in the month that they're built out, and these are real simple little tips and tricks that you can pick up on. It's like, well, if I'm purchasing something now, okay, I should be billing for it. If I don't need it now, communicate with your suppliers to be like, hey, we need it we need to order it now, but we need it in this particular time frame so it gets billed out in that cycle. So a lot of the time, Andrew will see it heaps, and I see it probably less frequently, but is that there'll be a massive dip in a month, and you'll be like, "Oh, what's happened there?" It's like, "Oh, I had to buy all these bits and pieces, and then the job got delayed, etc., etc." And then the next month, it's like
Yeah.
way high. So
Yeah.
what it is essentially the two of them. It's basically a balance. So if you added the two together, percentages, and divided by two, that's probably more of a correct indication. But what you want to do is you want to avoid the hills and valleys. We want to get the consistency, and like Ange was touching on before, the consistency around the approach of closing out the weeks and closing out the month is really starting to become evident for some of our members, and it's almost like a timestamp in a moment where you can be like, oh, this has started occurring here, or this is what's happened here, and we go full circle all the way back to the beginning of where you touched on. It basically dives into someone's life, and you can sort of it paints a picture of where they're at. So.
Yeah. Yeah.
But thanks very much, Ange, for that. It was very insightful. Hopefully, everyone who's listening back got a little bit out of this. If you want to know a little bit more or want to reach out to Ange, obviously, Codification, Accounting and Business Advisory is the business name. If that's all too hard, just reach out to either myself or Crowy, and we can put you straight in touch with Ange. If you want to just have a general discussion or get in touch around what services the business can offer. So thanks very much for coming along, Ange. Really appreciate it. And
Thank
we'll
you. Thanks for having me, and thanks for having me in part of your Sparky Coach program too. It's been amazing and watching everyone grow. It's been really cool.
no problems at all. We thank you a lot, and we know we get a lot of really really good feedback from a lot of members just around the I guess the ability you have to simplify the numbers within their business, and then in turn, I guess you can almost see their shoulders drop in a sense in a positive way, and then the relief that comes over them, they're like, hey, we can actually make some change here. So, as always, thanks everyone for tuning in, and we'll catch you next time.
Thank you. See ya.